it's Mark Eitel, host of the Mr. Mortgage Show, and today we're going to talk about land. That's right, 40 acres and a mule. Go west, my son. Follow the American dream. Go buy a hunk of land and build yourself the dream home. I know all of us have had that idea at least one time in our life where, we fancied the notion of finding a piece of property on a beautiful hillside covered in wildflowers with big oak trees and the sunset in the background, and we're going to build our dream home. I had an amazing conversation with a couple who are looking to do just that, and there were a ton of questions that came up regarding how to finance land. So it made me realize that it's worth a daily dose. So that's what we're doing. Buying and financing land. Land, raw land, undeveloped land, vacant land will typically fall into three categories. One is, as I mentioned, raw land. It's just that big parcel of property that you may not even know if you can build on it. It may be zoned for agricultural uses. It may have protected species, wetlands. You don't know. It's just a big piece of undeveloped property. Usually are no roads. There certainly are no amenities. There's typically no electric or water or telephone or cable service run to the property yet. In its truest form, it's raw land. The second category is typically called unimproved land. Now that is similar to raw land, but there may be some more amenities. There may be roads already. You can access the property. There may or may not even be electrical service in the area. A power line may run right past the property, but not yet to the property. It's closer to buildable, but not yet suitable to build a home on. That's unimproved land. Lastly, the third most common category is improved land. And when you think of improved land, that's like a building lot. Think of a vacant lot in an already existing subdivision, or several vacant lots in a soon-to-be-built subdivision. There's already a street, there's water, power, sewer, or at least power, and they're going to be on well and septic. But the amenities necessary are there or close enough by to service the property. That's typically improved land, or what you would call a building lot. And that's where you hear the term lot loan. So let's back up to the raw land. Raw land is more speculative in nature, so typically requires a larger down payment. It carries a shorter term. It may be an interest-only period for a few years with a balloon payment due after 3 or 5 years. There's typically around a 50% down payment with a shorter term, and that's more speculation surrounding. The next is unimproved land, similar to raw land, but a little further down the path to development. That too carries a large down payment and sometimes a slightly longer term, but typically a balloon payment or a shorter term, because the goal with the lender in those two instances is to get somebody on their way to an end goal. They're buying this big parcel of property to develop it as a subdivision, to create a working farm, whatever the case may be. So there's usually going to be a takeout financing strategy necessary to accomplish step 2 and sometimes step 3 of the goals. And then lastly, the improved land, the lot loan, is the easiest of them because we know it's buildable. We know the necessary amenities are there to build. So you can typically buy that with a 25% down payment. You can have a 10 to 20 year term depending on the lender. But this is the most common type of land financing that we see for people who want to build that dream home. The parcels are all very similar. The homes are very similar. And because of that, there's less speculation, less risk from the lender standpoint. But here's a cool thing. You can buy that piece of property and finance your construction at the same time with what's called a construction-perm-loan. Not to turn this into a construction-perm episode, but a construction-to-permanent loan basically is a hybrid. It's a hybrid financing model. So the construction of the home is financed during that initial period. That initial period typically doesn't require payments. Best way I can describe it is if the loan was $500,000 and during the construction period, it would cost $30,000 to service that loan. The bank will typically loan you $530,000 and just take the payments out of the loan. So you're not paying along the way. Once the CO is issued, the property's complete, it's passed all inspections, it's livable, you're able to move in. There's a conversion phase where that will now become whatever mortgage product that you selected. It it converts and your mortgage starts on that day. So I hope you found that interesting. Those are typically the three types of land transactions we see. Raw land being the most speculative, requiring a larger down payment, shorter loan term. Unimproved land also carrying a larger down payment with a shorter loan term. And then lastly, improved land, or what we would typically call a lot loan, is the vacant property in a subdivision or the vacant property amongst other similar properties. Anyway, that's all I have for you today. I thought it was interesting and worth sharing some of the details surrounding land loans and the loan products that enable you to buy them. Hey, if you found any of this interesting, please share the show. If you've got friends or family or coworkers who have mortgage or real estate questions, I welcome the opportunity to answer those questions for them. If you like what you hear, tune in live on Saturday mornings at 9 o'clock. We have the Mr. Mortgage Show on iHeartRadio every Saturday at 9 a.m. Just hit the iHeart app and search The Mr. Mortgage Show. You can find us on Facebook by searching The Mr. Mortgage Show. We publish and post a ton of data there every day. There's some really interesting articles around real estate and mortgage. And then if you want to find some of the replays of the radio show or these Daily Dose episodes, just visit MrMortgageRadio.com. You'll find the complete library of replays there. Again, my name is Mark Eitel, host of the Mr. Mortgage Show, and you have been listening to the Daily Dose. We'll talk again tomorrow. Thanks.